But let's take a slight detour because it's the fourth quarter earnings season and earnings are pouring in thick and fast. Rajiv Jain, CEO of Bajaj Finserv Lending, joins us on the show now. So if you look at the numbers that you have posted this time around, your profits have gone up quite healthy, over 50% jump. NII also about 33% on a YOY basis. Where do you see things heading from here on if you look at your margins, and would you think that growth which you have clocked this quarter is sustainable?
So on a full year basis, we've delivered a 45-46% growth, Ajay. The external environment continues to be volatile. That's pretty clear. Are we heading into a year with another strong growth? Yes. I think what kind of growth, I think, will be much more clearer after we cross quarter one as a company.
How was your margins? Give us an outlook. What kind of margin would you be able to, how have it fared in this quarter, and what is the kind of target band which you are aiming for the next 2-3 quarters?
So, see, fourth quarter was the strongest quarter for us in FY13, basically driven by very strong volume momentum. We crossed 5,000 crores of disbursals in the quarter and very strong credit performance across all our product lines. I think both these contributed. As you can see, our PAT is up 50, our deployments are up 21% and income is up 35%, but our loan loss growth is up only 13% only.
Right.
Credit held on very well, volume momentum was strong, and as a result, we've delivered, I think, an exceptional set of results for quarter four.
Right. Sanjeev, tell us about your net performing loan, non-performing loans, because on the net side, they have remained stable. Tell us how the sequential movement has been on the gross side.
Sequential movement on the gross side has also been very steady. Our provisioning standards are very rigorous. So as a result, the difference is differential over the last 24 months. If I look at it, between gross and net has been very, very narrow. So our gross NPAs have been in the region of 1.2%. We've ended the current quarter with 1.09% and net NPAs at 19 basis points. That gives us a provisioning coverage of 83-84%.
That's quite healthy, in fact. Your assets under management mix is also showing some changes. Commercial segment as a percentage of AUM has come down, while we have seen the share of consumer and SME actually increasing. What kind of a mix are you targeting for the next 1 year? Where exactly will your focus be?
I think you will see mix start to move a little bit in favor. Over the last 18 months, we've been soft on the commercial side of the business. We have degrown that business by 31% in the current quarter, in the current year. We will start to grow this gradually now if all the headline data that's coming out on green shoots is correct, but it will be a call that we will make as we go forward into the year. At this point, you may likely to see dominant contribution coming in from consumer and SME only, but we will start to grow commercial in a cautious manner from now on.
Okay, last question before we let you go. Of course, the stock is witnessing some profit taking. Perhaps the positiveness was already built in. Leave us with some guidance, some kind of a outlook which you are looking on the business front, on the margin front, for the full year, if not for the immediate quarter.
Yeah, I mean, so I would think a 20-25% asset growth and a 20-25% net income growth we should deliver as a management in the current year.
All right, Rajiv, thanks a lot for joining us on the show today. That's one of the Bajaj Group companies coming out with numbers, pretty interesting numbers. Of course, the stock has been a marked performer if you talk of the entire financial space. But of course, the headline news definitely remains the market.